Duolingo stock is set to go public. DUOL stock is the ticker. And a lot of folks think that Duolingo is the gold standard for learning a foreign language. The question is, should it be part of your investment journey? I'm struggling with that question myself as I wonder about, is this valuation just a little too rich? What is their long-term growth rates? If it is part of your investment journey, I'd love to hear it in the comments below after they go public, which should be shortly after this video is made. So let's dive into what is Duolingo and sort of what's going on. What's the latest news about it? So the latest news is that the IPO price was suggested to open up around 85 is now closer to 102 a share. So this does suggest that investors are excited to get a piece of the action in terms of buying into Duolingo IPO, DUOL. And to understand Duolingo, it's free, fun, effective way to learn a language. They claim to be the world's #1 way to learn a language. 40 languages, 40 million monthly active users. So they clearly do have significant share in terms of learning languages. And what really, going back to this gold standard with Duolingo, here it is, 40% of teachers in K through 12 in the United States use Duolingo as a tool. And I think it's broadly because of this key aspect where it's free and fun to use. That means free, that means teachers can easily say, hey, let's just roll this out. And fun, meaning it can appeal to pretty much people of all ages, students of all ages looking to learn a foreign language. And what's the appeal here? You sort of have a combination of gamification and competition, whether or not it's earning experience points, streaks, saying, hey, how many days have you been doing this? Let's make this into a habit. You've earned some gems, and then a leadership board showing how you compare versus, let's say, other people in your class. And another example, setting themselves as a gold standard in response to COVID, where universities could no longer do a physical examination, in-person examination of, let's say, English proficiency for international students. They went to Duolingo saying, hey, can you offer an online exam that proves these students, these international students, know English? And now it's a tool used by Yale, Stanford, Duke, MIT, and Columbia. So this is an example, once again, Duolingo viewed as a gold standard of learning a foreign language around the world. And they've also claimed to have the world's largest learning data set, where you have more learners, more data, more A/B testing, seeing what's effective. Oh, okay, this is what it takes to get someone to get to this next level, or this is the lesson that was too hard and that's what broke the streak. So you get more insights. With these insights, you can figure out, okay, how do we figure out maybe these frictions that result in more paid subscribers? And we'll talk more about this paid subscription in a minute, but then you get more and more paid subscribers, which creates more investment content. And with investment content, you can start laying on new products. And Duolingo is sort of saying, look, our mission is to help educate people around the world, and it's not just foreign language, though that's what they're known for right now. Their view is, over time, as we get bigger, we generate more revenue, we will have more money that we can allocate into launching new products, maybe teaching literacy broadly or teaching math. And maybe you keep scaling up. Maybe it becomes the equivalent of a Khan Academy or something like that. And so this is strong data points, and their branding as a gold standard, it really does stand out. And I think something in the prospectus, they called out how their brand has become even more searched than, let's say, if you want to go learn Spanish. More folks go to Duolingo Spanish than learn Spanish on Google, which struck me as just a mind-blowing figure. They also said something like there are more people looking to learn, I think, Irish and Hawaiian than there are native speakers of Irish and Hawaiian. So that just blew me away of how many people that they've had on their platform to learn foreign languages and what they're doing, the tools that they're enabling. And so the bookings that this business has, I mean, look, this business has had significant growth, where their bookings effectively has gone from immaterial revenue to nearly 200 million in revenue, hyper growth. And part of this is just learning to monetize, creating frictions in the user experience. So that way people say, you know what, I'm willing to pay for a premium service. And so about 3/4 of their business is subscription related. We'll talk more about that in a second. The large component is advertising, so that's for the 95% of users that are free. And then Duolingo English Test is the third large component after that. And to understand why do people pay for it, once again, it's dealing with friction points where, let's say it's getting unlimited tests where you can keep going over your mistakes, or if you have a lot of mistakes, you can't keep on going. There's sort of, you sort of get a timeout. We're sort of saying, hey, I just want to keep on learning for a fairly, very affordable price of effectively $7 to $13 a month, depending on how you want to pay for it, either lock in on an annual or $13 for the monthly. You could effectively say, you know what, I can go at my own pace. If I'm making a ton of mistakes, it's okay. I got this unlimited hearts. I can keep playing, keep learning. So people are paying for plus. And this is where the opportunity is, or a lot of great potential, is because as their monthly active users has grown over time from a little under 20 million to a little under 40 million, the amount of paid users has gone from effectively 0 to about 5%. So this is great potential because could this be 10%, 20%, 30% over time where users say, yeah, it is worthwhile to pay. But this also does suggest a risk of a potential slowdown because of the fact that they had this huge bump because of COVID, and in prior years they were really only growing their monthly active users at a teens rate. Now they're probably growing their bookings at a faster rate because their paid penetration amount was going up. But the question is, where does this stall out? Does this stall out at 10%? Does it stall out at 15%? Because at that point you go back down to this slower growth rate presumably, unless you're successful at adding new products. And this is a concern that I have because there's this sort of trade-off of social good versus generating revenue. And for example, they've reinvested their revenue into developing literacy apps for young children, and that is not something that they've been able to monetize so far, I believe. So that creates a challenge of like, oh, okay, well, wait a second, this is doing good for the world versus a good business model, and that is a challenge for their long-term growth rates. And you've seen significant growth deceleration that they're penciling out for the second quarter of 2021 of about 45% growth year over year versus the 100% plus growth they'd recently seen. Now maybe this is, management just sandbagging their estimates and, keeping them low where they're set to, under promise over deliver, or maybe they truly are seeing a significant deceleration in their business. I view that as a real risk. I want to wait and see with this business, but you see that they're currently effectively at a break even or slightly profitable EBITDA figure when you're thinking about their profit margins. This is mostly due to the fact that they're adding back stock-based compensation. And it makes me wonder as I look at this, is this just a timely IPO taking advantage of the fact that there's a surge, the surge in learning app interest because of the COVID pandemic, where maybe as people sort of say, hey, this is the new normal in terms of living with COVID, that this surge in learning apps does decline significantly, where folks sort of say, well, wait a second, we're pricing this off of this one-time growth rate, whereas in reality, their growth rate might be much lower in the future. And we'll talk about that in just a quick second. But first, a quick plug, as we discussed before jumping into their valuation, a quick plug where once again, this is Daniel and you're watching Unrivaled Investing. If you enjoy learning about potential multi-baggers, please make a point of subscribing, hitting that thumbs up button. If you want to follow my personal journey as I call out potential multi-baggers, go to unrivaledinvesting.com. First week of the month, I call out my full portfolio, weekly updates, and once a month, I call out one potential multi-bagger. And I personally believe just finding one potential multi-bagger can change your life journey. So if you're interested in following my journey, go to unrivaledinvesting.com. Let's dive back into this valuation for Duolingo stock, DUOL. So set to open up around $102 a share. That's around $4.5 billion valuation. I don't know what 2018 revenue is because they didn't disclose it, because that, in my opinion, would show how their growth rate did accelerate significantly from 2019 to 2020. That said, maybe they just didn't have 2018 figures audited. So what is the growth rate for 2021? I'm saying maybe 50 to 70%. I'm saying maybe they're sandbagging their figures for the second quarter. Maybe it's lower. So this is where I want to see more data before, sort of saying, hey, this is really, I'm comfortable with this range. The question around what's their long-term profit margins, that's trickier because they currently have around a 70% gross margin. And to understand the 70% gross margin figure, it's effectively payment processing fees as well as the App Store fees. And Apple App Store, Google Store, they take about a 30% cut in all revenue that goes through them. And that is a huge cut. And the question is, will that change over time because of lawsuits with Epic or regulatory pressure effectively saying, hey, you're taking advantage of nearly a monopolistic position. Maybe instead of a 30% profit on this, you should have a 10 or 5%. But while that would hurt companies like Apple, company like Duolingo would be a huge net beneficiary of something like that. And so, as I look at what their profit margins could be over time, that is a scenario that I am considering as I'm looking at potentially this high scenario of 50% operating margins over time, because maybe their gross margins go to, let's say, 80% over time. A lot depends on how much they're going to be reinvesting, how much will they want to spend on sales and marketing, these types of questions. So as I look at this, considering these different growth rates, considering that maybe over the ensuing 4 years, so I try to take a long-term framework. I'm trying to take a 5-year perspective, so 2021, then 4 years after it. Assume a growth rate of 20 to 30% annualized revenue growth, then assumed an N multiple 5 years out at 20 to 30 times. That effectively gets you a little over 100% upside and nearly 60% downside, a little over 60% downside. This is a hypothetical framework. Once again, of course, stock prices can go way higher or way lower, but I think it's important to call out that there's a lot of variables here that can swing widely, such as their margins over time, such as their growth rates over time, as I called out with the fact that they had this huge benefit from COVID. So I like the fact that they're going to be investing a lot in developing new tools. I think that's a huge win for the world and for society. But there is this sort of trade-off of sort of saying, well, what's good for society versus what's good for the business model? And does that mean slower growth rates? And this isn't my first time considering that sort of trade-off. I think most companies have that sort of trade-off that they consider. But for example, my Journey subscribers know with my July potential multi-bagger, it's a healthcare company growing hyper fast, 70-80% growth rate. They're profitable now, and they traded effectively 1/4 the valuation that you see with Duolingo. So that is an example of something where I'm like, wow, that risk reward strikes me as way more compelling than what I'm seeing with Duolingo right now. If this video has been helpful for you as we talk about Duolingo DUOL stock, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. If you personally have used the Duolingo product, or you're thinking of buying with the IPO, or you already bought and you're thinking, maybe I'm missing something on their business model or the valuation, leave a comment below. I'd love to hear it. Thanks so much for watching.